So Australia's housing markets are in the grips of a material correction that still has some way to run. There's two factors that are really going to determine the course of the current correction phase. How the inflation outlook evolves and how much scope the RBA has to pivot, not just to put rates on hold, but to pivot to an easing cycle. And the second is how much impact the tightening has on the economy, particularly the labour markets. We need to get through both of those before we can establish a base to this market, let alone a recovery. And at the moment that looks like both of those criteria aren't going to come into place until late 2023. So far we've seen prices nationally drop 7.5% since the correction began in April. It's run further in Sydney where the correction started earlier. Price is now down about 11%. That's about halfway through the full peak to trough move we're expecting for capital cities through this correction. We have seen some tentative signs of a slowing in price declines month to month, and within auction markets clearance rates have lifted, but it looks to be mainly about very thin trading. We've seen sellers pull back quite sharply over the last couple of months, and new listings are very low. Basically we're seeing about 20,000 new listings across the major capital cities a month and 25,000 sales. So the stock on market is still reasonably low, but I think that's more about sellers shelving their plans to sell, not a sign of an imminent stabilisation in the market. So it looks to us like we've got another 12 months of price declines, probably at a milder pace than we've seen through 2022, but establishing that recovery is going to require a pivot in expectations for the RBA and clear signs that the wider economy is stabilising.